Hello and welcome to Crypto Weeklies. Today in this video we are going to do a pair analysis. This is Sol as divided by Bitcoin's price. This is Sol price divided by Bitcoin price. That's why again none of the content financial advice. That's why the axis on the y axis over here is in fractions. That's because Sol's price right now is at around $78. Bitcoin's price is at around $67,000. So what we need to identify, again, this is Sol USD analysis. Now that Sol is below the 200-week simple moving average, this is the first time in the bear market. Again, this is Sol's second bear market, but Sol was launched in 2021. So although the Sol's price action right now has, my apologies, Sol launched in April 2020. But although again not much has changed, although this is second bear market for Sol, the first 200-week Sol completed was in 2024 February, and that's after the recovery in the bear market. Here you can extrapolate or interpolate that behavior of the 200-week simple moving average. Let's color code it in blue color so that it stays consistent. This is the 200-week simple moving average line, and this is the interpolated or extrapolated inward line, the behavior of this trajectory. So whenever the price action went sub 200-week simple moving average in the bear market, like it did in 2022 October, and consistently or intermittently stayed below the 200-week simple moving, what could have been the 200-week simple moving average had there been more price action data till about October 2023. Now in the bear market of 2026, since January began, the panic drop in April 2025 found the support at 200-week simple moving average over here. But now in the bear market here, price is below the 200-week simple moving average, which is $104 at that price, and 300-week simple moving average, which again price Sol just barely completed the first 300-week as an asset in December 2025 at the end of the 2025 bull market year. In 2026, the 300-week simple moving average is at around $91. So those are the two levels in terms of the USD prediction. What is more arguably important is the relationship with Sol BTC. If let's say Sol BTC pair is again having a diminished volatility to the upside, what needs to happen for Sol to be a high quality asset in the future bull runs is if the highs that Sol had against Bitcoin at 0.003 this time around went almost to that level in March 2024, but fell shy of that level by about let's say 30%, because again this is almost 28 and this is almost 40. So if you divide it by that, divide 28 by 40, you would get 70%. So about 30% short than the 2021 rallies again. And this high came earlier than the post-halving year. Last time around in 2021, the Sol BTC pair peaked in December 2021. This time around, this peaked in March 2024. In 2025, actually, the lower highs and lower lows trajectory kind of started. What Sol has again, if there is a no panic bear market for Sol with respect to its price action valued in Bitcoin, the forecast for Sol BTC is from the current price or current valuation of at 0.0011, which is roughly speaking half of what Sol did in September 2025 against BTC. The drop to about 0.00, another zero, so 3 zeros and then 844 would be still low, still better than what the last time around this level came at around 580 in 2023. And again in 2021 also there was a bottom, and in 2023 there was another bottom, first in January and then back in June, July time period in 2023. If this time around there is a higher low compared to that 2023 bottom, the first stop for that is at around 830. this is 10 raised to minus 6. So this is again 3 zeros and then on that fraction. So if we do a mathematical equation, let's say to identify this over here on Wolfram Alpha, this was 0.000844. This is the Sol BTC valuation, and again right now the price of Bitcoin is currently coming in at around 68k. Let's stick with that price just to help you understand. So that's 68k, not 6. So that's why the price again right now, the price of Sol is at around $78. If the Sol valuation were to go to that around 844, then the price at the floor for Sol would be $57 if price of Bitcoin floor is 68k. But if let's say Bitcoin floor is closer to $50,000, which again could happen in this bear market, then the Sol floor falls to $42, which is roughly speaking half of the current valuation. The current valuation is close to $80. $42 would be closer to that, half of the current price. If let's say Bitcoin were to fall to, instead of 50,000, let's say 45,000 at the panic bear market drop this time around, then Sol, if it were to maintain this bear market drawdown, then Sol's bottom could be around $38 at the bottom. So these valuations help more than Sol's, let's say for example, its own machine learning based USD price based model, because again Sol, whatever Sol does is a function of what Bitcoin does. But again there is still these kind of drops are estimated from, this is Sol USD based price analysis, and estimating a bear market drop in that non-panic bear market drop. If let's say the bear market continues all the way in the next 6 months till about September 2026, the bear market drop for Sol could be as worse between $32 to $33 as estimated by our machine learning based model. That doesn't mean that again this has to happen. What the time weighted average price analysis indicates that right now this white line over here indicates that Sol is in some sort of a shallow accumulation mode, like it was back in 2022 at around $52. That did not stop stops Solana to drop to all the way less than $10. Nonetheless, accumulating in this range, again nobody knew what would happen in 2024-2025 time period, but it was a decent accumulation zone using its own price action as a history. And this is a live model, so it analyzes where the asset has spent its entire life. That is, Sol as an asset every day, the average price for every single day since 2020 is informs this time weighted average price. And whenever the price is lower than time weighted average price, essentially this helps entering at a level where the market has historically spent very little time in that zone. If the underlying asset has a series of higher highs and higher lows in store, accumulating below the time weighted average price historically usually works out, again, but not financial advice. This is a shallow territory right now. It's not like in a deep accumulation territory. The last bear market, if it was any indication, the difference between the price and the time weighted average price at the bottom was at negative 80%. So at 2022 panic bottom, the price was at around $10, whereas the time weighted average price was $51. Right now the time weighted average price is $86 because price has spent a lot of time above the $51 range. That's why the price, because the price spent a lot of time above it, it takes the time weighted average price along with it. So this model serves essentially two purposes: identifying the distribution phase, which is typically anything risk level 8 or above, in 2024, as well as in twice in 2024 as well as once in 2025 the risk levels were above risk level 8, and again risk level 9 was achieved in 2024 and twice in 2024 again. So this time around, accumulating below the risk level 1 again, or close enough to that time weighted average price is not the worst idea, but again that doesn't stop the underlying asset to drop. Let's say this time around 55% drop on that $86 time weighted average price would get price action of the Sol at the bottom close to $43. Let's say if the drops are any more severe than that, then we are talking at sub $40 sol at the end of this bear market. Nonetheless, this model indicates a shallow accumulation zone. Even the composite risk model says that the overall risk with respect to accumulating sol at this point is at around 0.3. That is the very boundary of the accumulation territory. And this is the composite model takes into consideration all of these individual risk-based model that you see on this line over here, and try to aggregate the behavior across all of the model. This is the logarithmic regression based polynomial regression based fair value estimation with diminished volatility. This model says that the fair value of sol is at around $106, which kind of corresponds well with that 200-week simple moving average. And anytime the price goes sub one standard deviation residual below that fair value, that's when the accumulation zone for sol typically begins. This aligns well with that intrapolated or drawn back fair value, drawn back 200-week simple moving average, where you can see that this model, the blue line over here, is typically closer to that green line over here. This hasn't happened in this bear market. Price, if it goes below $51, this model would also trigger some sort of an accumulation or deep undervaluation zone for sol. For context, the bottom occurred 2 standard deviation residual below the fair value. Again, we are not calling for that kind of a bottom every single time, but nonetheless, at least the shallow accumulation based undervaluation territory in the bear market years is not too much to expect at this point. So $51 sol could be one of the bottoming prediction. All in all, if we were to look for any bear market bottom rather than spending too much time on each of these individual model, the estimated bear market bottom for sol is at around $44, and if there is a panic, the price floor is between $35 and $44. With that, I would like to conclude. Hope you enjoyed the content. If you did, please give a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.